Let's take a look at how the markets are performing on this day. The Johannesburg Stock Exchange is weaker today, along with its global peers, as rising energy prices fuel the concern that inflation will accelerate. Stocks are lower on new worries that the U.S. yield spike will hamper the economic recovery. Karl Gevers, portfolio manager and co-founder at Benguela Global Fund Managers, joins us now to talk through these and other leading business stories. Mr. Gevers, a very good afternoon to you. Let's focus then on the local exchange. How is that faring today?
Yeah, good afternoon, Tommy. As you said, the market under pressure. So after a rebound yesterday, the ALG is currently trading at 1.6% down. In line with the rest of the market, we saw Asia also having a weak day today, and Europe currently also under pressure, with the European indices down over 2% in France, Germany, and the UK. So the main reason for that is the negative global sentiment driven by the inflationary pressures that we are seeing from higher energy costs. And additionally, we've got the commodity prices coming under pressure, and that's certainly impacting our market, with the resources down over 2%, industrials currently down 1.9%, and financials faring a bit better, down 0.75%.
Now, the local currency is also under pressure. In early trade, the rand had weakened by 1.12% to 15 rand 16 against the US dollar. What could be the sentiments impacting those moves?
Yeah, I think the main element driving that is firstly the risk off, so increased volatility. The high risk elements of the market may be pulling out slightly, but I think the bigger picture is that locally, we do benefit from higher commodity prices, like iron ore and the platinum group metals, copper and so on. And those have come back a bit. And on the other side, you've got the oil price that has reached 7-year highs, which is something that we have to import and pay. So I think on the balance there, it's not looking that great for us, and hence the rand weakening about 1% weaker today at 15 rand 15 to the dollar.
And talking about the oil prices that you've mentioned there, indeed, they have hit a multi-year high, above $83 a barrel. But what are the forces that are driving prices there?
Yeah, I mean, the main element there is Monday, the OPEC group had a meeting, and there they confirmed their commitment to only gradual increase in production. So you've had logistical also pressures in terms of limiting supply, with only gradual increase in supply, and you've had increasing demand as economies have recovered. So I think that's played out and certainly driven the oil price. Where the risk is that it could actually put pressure on economic recovery, given that oil and energy costs are a key component of, at least cost component of economies. So it could cause some pressure down the line.
We see agri-business focus ZETA Investment says its headline earnings per share increased from a loss of 14.3 cents to a gain of 31.4 cents per share. Take us through the group's results.
Yeah, so ZETA is effectively a holding company of agri and agri-related logistics businesses. And in their results for the 6 months to August, as you mentioned, headline earnings per share improving from a loss of 14.3 cents previously to 31.4 cents in the current 6 months. But I think more importantly, as a holding company, one looks at the net asset value, and that net asset value per share is up 19.3% to 4.45 rand, on the back of increased valuations for their businesses, TLG, Capespan, and Carp Agri. That's done pretty well. It's still trading at a steep 27% discount to the net asset value, currently trading at 3.25. So something that management is certainly looking at reducing. The comparative period did have the big sales of Pioneer, their stake in Pioneer, to PepsiCo, and also exiting the Quantum Foods business. So also a big special dividend on the back of those cash flows. So one has to take those out in the comparison. But I think overall a good result. Management is, however, reconsidering the strategy, given that they exited those 2 large investments, and looking ahead, obviously in terms of strategy, focusing on their current businesses, but positive outlook in terms of the positive climate environment, and also the demand for commodities that should bode well for the group.
Mr. Karl Gevers, thank you once again for today's market update.